Ahoy there! Welcome to this week's workshop. We're going to be looking at a few interesting things. We've got a new sexy slide. So we've got a little bit of an education section later on today. We've got scanning for setups. And it's not going to be like Ghostbusters, which is where I shamelessly swiped the imagery from. But nonetheless, we will be scanning for opportunities and how to actually do that and build a scan so that we don't have to flick through chart after chart after chart or read through boring company reports. But nonetheless, as I see the names just pop into the room, again, welcome. If this week is your first week with us, my name's Phil Newton. I've been trading full time since 2001. And really this slide is just to demonstrate that I'm not brand new to this. I've been doing this for 20 years. I've had assets under management of around 10 million when I ran my fund. Been calling my trades out in real time since 2004. All the good and the bad, you get everything. There's nothing to hide behind. And again, I've just been doing this a while. That's really all I'm trying to demonstrate here. So with that said, let's jump right in. If you do need some help, I am looking for my next success students. So if I personally offered to help you create wealth without worry, to finally master swing trading stocks, and to be able to speed up your learning curve in the next 7 days, just doing an hour a day, and then start to see results over the next 90 days or less without spending hours flicking through chart after chart after chart or reading through boring company reports. If that is of interest to you and you want to speed up and accelerate your own learning and trading strategy and have your own production line trading, then let's start the conversation by sending an email to phil@antivestor.com. And I'll help you determine if what we do is right for you. And if it is, great. And if it isn't, as I've always said to everyone, I'll always point you off in the right direction. Or you can very simply just go directly to the site, AntiVestor.com. If you're at the newer end of the spectrum and today's kind of your first day and you don't know what you don't know, we've got a basics training. It's only $45, and that just helps you sift through all the nonsense and the fluff and the filler and just get straight down to what do I need to know to make this work. If you're a little bit more newer and you already know what a chart is and all that jazz, and what you need is a systematic approach to find, filter, and sort stocks, also known as a strategy, you can use mine if you want. We've got the profits training. It's a complete end-to-end solution, production line trading that you can profit from in any market. And the members area looks a little bit like this with all the strategies and tools and stuff that we have inside. But nonetheless, with that said, we're going to come back to scanning. Let's take a look over my shoulder and figure out how to scan. So one of the things that I mentioned earlier was how do we, well, basically all the data that I'm digging through with the automated, it's about 80% automated, but it just allows me to test what I consider to be the worst version of the strategy or a strategy. And for me, signal to signal is the worst version of a strategy. So this is an illustration of the phases that we look for. We're looking for phase 3 trends, but signal to signal is, for example, if you had a moving average crossover system, we use moving averages to help determine what phase of movements a market is in. But let's just say that you did have a trend crossover system and you've got the bullish cross there, the bearish cross there. So that would be the signal to signal that I was just on about. That's usually the worst version of any strategy. There's no money management involved whatsoever. So when I'm testing things, testing ideas, this is usually my first start point. So all the data that I'm looking at is suggesting to just trade phase 3 trends. So in the context of the moving averages, again, we've got a whole training on this, interestingly called market phases. But what we've got is after the moving averages are crossed over, we can typically start thinking, okay, we've got a bullish trend. So what we're looking for is when price is above both the 200 period moving average and the 50 period moving average. And typically That's our strongest part of the trend. And we want to try and avoid, we're not always going to be perfect with it, but we want to try and avoid the sideways phase or resting phase. That sounds like my apple's being filled. Sorry, dudes. Yes, double bubble, 100%. I like it. Sorry, I got distracted and very excited. I didn't think I was going to get it. So we've got, you've no idea how happy that makes me. I honestly thought that the Apple trade that we went through earlier wasn't quite going to make it. I thought at best I may get a break even. We'll take a look at that in a moment when we're thinking about scans. So that's the phase 3. So all the data that I'm doing and all the data that I'm looking at is validating this. Just trade a phase 3 trend. We want to try and avoid the resting phase, which is a consolidation, a contraction in price, and try and focus all our attention on those booming phases. So try and avoid the resting and just focus on those booming phases. So that's what we're looking for. So for me personally, this is an idealized version. I'm waving my hands around to illustrate the points. You just have to imagine me doing it because I'm not on camera today. But that's what I'm looking for. I'm looking for where's the strongest trends. And if we can just trade those, then we're going to do just fine. So that's what I'm looking for. So when I'm talking about the end in mind, we need to know what it is that we're looking for. So again, for me, I'm looking for a phase 3 trend. We've covered this in previous workshops. Now let's just say that for your strategy, for your flavor of trading, you might need a ranging market. Well, maybe you need to recognize that the phase that we're in is phase 2. So if you're looking for a range reversal or a breakout of the range, then maybe we're looking for a phase 2 because that's going to help you with your setup. So this is the end in mind. Now let's just say that you're a counter trend trader. Surprise, surprise. You're going to need to know what phase of movements. You're going to need to know that maybe you're in a trending phase so that you can trade counter trend when your conditions are met. So understanding the phase of movement that a market is in is critically important for any strategy. Depending on how you prefer to trade, then understanding where the market's at is going to help you figure out, okay, well, the market's got good conditions for the things that I like to trade, or it's not got good conditions, or it's about to have good conditions, or it's not got, you know, or things are slowing down. So this is what I mean by we need to know what the end looks like first before we can start to scan, because when we know that, we can come back to the scanning part of what we do. So let's go and look at the charts. I've got to go and look at Apple now. Look at that, 481.5. There we go, very nice. So scans, scan. Let's use Apple as the example. So why did we trade Apple? Firstly, as you can see there, it's on a raging tear, a raging bull. I'm not going to insult your intelligence to say that Phil was in perfectly here, because we've made a few changes over the last several months to the strategy to tighten things up. So I joined the party a little bit later, right about here. So one of the things that I'm looking for is a phase 3 trend. So there's the 200 period that we mentioned, there's the 50 period, and we can see very clearly that price is above the moving averages. And not only that, prices are making higher highs and higher lows. So when I know that, and that's what I'm looking for, then I can do all the heavy lifting on the left. I can do all of the heavy lifting in a watch list and look at my universe of stocks. So that's what these blue and red boxes are. And all this is it's a custom widget. And the only thing that makes it custom is instead of a number, I have it blue and red. That's it. So that's all I've had done. And you can get someone to do it for inexpensive, like $50 or less probably. You can get something similar on your own preferred charting platform. And these scans, you can do them. A lot of these scans are built in. They're usually referred to as a golden cross or a death cross. I didn't make the names up. Don't roll your eyes at me. But that's what they're typically called. So all I've done is I've coded up just so that it's visually a little bit more appealing. The tools that I'm using, I give away for free inside of the members area. You don't have to pay any extra when you sign up. You get access to them in the Profits training program. And if you use TradeStation, then you have automatic access to them. So if I'm looking, so Apple's at the top there, we can see there. So what it's telling me, I've got blue, blue, blue. So if I'm looking for a stock that's in a phase 3 trend, that's what I'm looking for. This is the visual view, the visual version of what I'm looking for. So to scan for it, I can do all of the lifting over here. So when we cast our eyes down, I can see that Apple at the top there is in blue, blue, blue. And so what I'm waiting for is a retracement. Does that make sense? So because I want to buy the dip in an uptrend. So now that I know that Apple is going up, and it's not just going up, because arguably in the last 12 months, if you looked at the price there, you could still say it's going up, but that phase, it was in what we refer to as phase 2. So as it moves out, we want it to be in phase 3, which it is and has been for several weeks now and continues on a charge. How do we participate? How do we get involved in this chart? So this is where we can wait for a retracement, but what if this is a strong trend, which is great. That's what we're looking for, a strong trend. And that's what this tool down here helps me do. Again, this is percentage R. We spoke about this earlier. I've got a longer period setting. So this is not the default setting. I've got a longer period setting. And what it allows me to do is to help me find breakouts. Now, all percentage R does, and it's Williams percentage R is the full name. All that does is it helps me see that price is in the top 20% or the bottom 20% of its rolling range, in whatever the range that you set is, whether it's 10, 20, 30, 40, whatever the setting is, a longer period setting. Let's just say that we've got a 30 period setting, which surprisingly is exactly what that is. So let's just say that you've got a 30 period setting, and all it's doing is saying that, well, if it's above that 80 level, then we're in the top 20%. And if it's below that 20 level, then we're in the bottom 20%. And that's all that's doing. Stochastics works in the same way. It's a little bit smoother. But what you'll find is a lot of these oscillators, they work in very similar ways. There's no such thing as a perfect indicator. And we've spoken about that in previous sessions in indicator stacking workshop that we did. But when you understand the tool that you're using, and I know what I'm looking for, let's draw it. I'm looking for a rally, the trend. I'm looking for a retracement, a deep retracement in price or time. And then I'm looking for that push to a new high. So I can look for that, oops, pressing the wrong button. So I can look for, there's the rally, that's what we're looking for, the retracements. And I'm looking to either get in on a reversal on the retracements with those reversal V's that we were talking about. Just like there, you've got that V-shaped pattern, another V-shaped pattern there. Or as price continues to move higher, we're looking for those rallies retracements. So Apple's a really good example of rally retracements. And that's what this is helping us. It helps me find, okay, price is not only rallying and retracing, but it's doing it in its top 20% of its rolling range. It's making new highs. That's the key point there. So we want to buy the dip. We want to buy the dip, the retracements, as it's making new highs. So right now we've got small retracements. So there's one way that we can find opportunities. Now, I don't want to look at every chart every day, all of the time. I want to put that indicator in a watch list so that I can see that Apple has been in a bull trend It's been overbought, classically overbought, which is perfect for strong trend phase 3 trading. It's been there for 84, I don't know if you can see that, but for 84 days, that's where it's been. It's been in a strong trend for 84 days. So that's what this next column allows me to do, is to take that indicator and put it in the watch list. Now, if it was a default, the default view, again, I've had it customized. Again, all I've had it customized to show is, instead of give me the number, which is fine, it would just have a reading of anything over 80. You can pop that in the watch list over here. So when you have that reading over 80, all I've got it to do is to say, if it's over 80, let me know that it's bullish. If it's below 80, I'm not interested. So down here, you can see that we've got a yellow indication, and that's telling me that, you know, it's just gone into an overbought or classically overbought condition. So this means that I can scan for stocks without having to flick through chart after chart. I can just scan down my list, my universe. Let's just go and do that now. So this is my updated universe. We've got that available free for everyone. So I can see in my watch list, my scan, I know what I'm looking for. Strong trend, phase 3. So Apple, we've got our example, blue, 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 great. So we've got a green bull. It's been in a strong trend for nearly 90 days. But let's see if we can find a new one. So I can scan down and visually I can say, okay, well, there's a yellow one. That means it's just gone above the 80 level. It's bull, bull. So I've got 3 possible candidates today to look at. So while I've got this what we can see in view, while I've got 50 stocks in my current universe, I only need to look at 3 of them. So let me just pause there. Does that make sense? I've gone through what a strong trend looks like. I'm looking for phase 3. I'm looking for support that it's not just above the averages, but it's also making new highs over its 30-day rolling range. And then when I know that, I know what the end's supposed to look like. I can scan for those conditions. Now, if you are, before we look at the charts, if you are, if you are doing this on one of the other platforms, this is TradingView. I'm not a member, I'm not a subscriber, I'm not affiliated, there's no weird kickbacks. It's just a free tool that if you're looking for a charting platform and you don't have TradeStation, then you can do it. So what you have here at the bottom left, this is just a random chart. So you click on Stock Screener and you can start to input all of the filters that you want there. So you can actually go and look for stocks that are in, you got moving averages there. So simple moving average, you can say simple moving average, just change it from 20 to 50 and 50 to 200. So it's above the moving average. You can look for those conditions there. And maybe, well, here we go. There's a checkbox. It's 30 days is about a month. It's a surprise, surprise. Who would have thought? We don't even need to worry about the indicator. So we can go, well, it's making a new 1 month high as well. So all of these things there, don't worry if you've not got TradeStation. That's my preferred tool of choice. And I like doing things like it's in a spreadsheet. But just, oops, a daisy. Oops, a daisy. I pressed the wrong one. What's going on here? Looks like I've deleted something. Oh, never the minds. Never the minds. Let me just see if I can close that. Because for some reason, it's deleted all the charts. How did that happen? There we go. Fishing. Recent workspaces. Fishing. There we go. And as if by magic, 3, 2, 1, we're back. Oh, panic averted. Great. So, wipe the sweat off my brow. It was nearly an emergency. So this is what we have. We've got a situation where when we know what we're looking for, it suddenly becomes a lot easier to find those things that we're looking for. So if you are going to do a scan, and when you know what you're looking for, it makes it significantly easier to go and find it. So don't do the scan first. The mistake that most people make when they're thinking about a scanner, I'm going to scan for stocks. I'm going to find the next big thing, whatever the thing is. Inevitably, that doesn't always work, and it's never worked in my experience. So what we need to know what we're looking for first on the charts. What's the idealized thing that we're looking for? And then we can scan for it in our spreadsheet or we can do it like on TradingView, where we check all the boxes and input, and then we can pull all the levers and twist all the dials behind the scenes. And then it's going to spit out, these are the 3 stocks that we need to look at today. So let's take that trade a little bit further. Let's go back to Apple. Let's review Apple's trade. So now that's literally just ran to its conclusion. So now that I know, and earlier in the week, I was looking for a trade. So we know that the daily chart is bullish. And this is now the 60-minute chart of Apple. So this same percentage R indicator is on the bottom here. And what I'm looking for, as we said earlier, is a retracement. So I know that the daily chart is busting not just new 30-day highs, but it's trailblazing new highs, just like the NASDAQ, just like the indexes. But what I'm looking for is an opportunity to buy the dip. And I've used Bollinger Bands in the past, and the downside to Bollinger Bands, again, nothing wrong with them. I teach them and the use of it at the moment. But right now we have a lot of strong trends and we're not seeing deep retracements. So one of the reasons why I'm favoring percentage R at the moment is that we get that retracement, that same retracement that we just looked at on the Dow Jones ETF, DIA. We've got a retracement, but you can see vertically, it's not a deep retracement, because when you have a strong trend, you are not going to get a deep retracement. So what percentage R allows me to do is to factor in the time elements. Well, over time, it was at its lowest point in a rolling period of time. So that's what that indicator allows me to do, is to say, you know what, it's not done a deep retracement. It is classically oversold in that context, but then in context, I've got a absolutely huge trend to say, I want to buy the dip. And we've got that pause, that retracement, we've got the time factor in, and as it goes in its bottom 20% of its rolling range, I can say, you know what, now that is the time. And you can see the trade's already marked off. We had that, I showed you the statements with the broker. That was the first trade that we placed. And here is where we re-entered. It just pipped me in on Monday. A little bit frustrating, but that's just the way it goes. So we've got that break to a new, can everyone see that? We've got the break to a new high, same principle. And we've got the, in the top 20% now. So we've gone from the bottom to the top. Most people will be looking, when they use indicators and especially oscillators, out of context. In the context of a trend, you want to see it overbought. It's showing you a strong trend. In an oversold condition, yeah, that's going to help you buy the dip. So we got in there. Excuse me. We had to sit through some further sideways. A little bit frustrating, I've got to admit, to say the least. And as you can see now, it's just pushing through. We've hit a target. And if you think back to a prior workshop where we looked at the strikes, we looked at the 30 delta strike with a short-term expiration, because we know our average time in trade is 3 days. We're 4 and a bit days into this now. 30 delta has hit its target, and we've essentially doubled our money in 5 days. So that's the trade. That's how we got in. That's how we can use indicators. And if you're looking at a large number of, I wouldn't do this on 60-minute charts all the time, but you can certainly find those same setups on a daily chart. So you find those same setups on a daily chart as price retraces. So if you think about, again, just coming down to the fishing, so we've got blue, blue, blue. So if I saw a bear, so here we go. So can everyone see this? So row number 17, let me just highlight that. So that row there, row number 17, XPO, blue, 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 it's in a phase 3 trend. So without looking at the chart, phase 3 trend. But I can also see that, and it's been in that trend for several days, but I can also see that, well, I'm in the lower 20% of that daily, the percentage R indicator here. So there's my retracement right there. Can everyone see that? So strong phase 3 trend, but we're retracing. So what I would be expecting to see is a retracement in an uptrend, and it might be a deep retracement. Like I've already looked at this, so I kind of know what it is. But what I would be expecting to see before I look at the chart, I know what I'm expecting to see: a trending chart that is retracing either in depth, price, or in time. That's what I'm expecting to see. So let's go and look at the chart. XPO, if you want to have a look at this. So I already know, I've already looked at it. So we've got this, oh, my apologies, I just read the wrong chart. So we've got this phase 3. So there's our cross. Price is above the 50 and the 200. And my apologies, I actually read the wrong column. So that's all completely my fault. But what I'd be looking for here now, I'd be looking for a time where price is oversold or overbought, and it's not either of those things, and we can visually see it in a range. My apologies, folks, I was looking at the wrong column. I was looking at that column instead of the one next to it. So let's see if we can do the same thing. I'm looking for bull, 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 and I'm not seeing a good example of, how about a bull bear, bull bear, bull bear. I'm looking for an example, and I'm not seeing a deep retracement. So what I was looking for was, as I described, I'm looking for all blues, so phase 3 trends. And then I was looking for, in this column, not the one I was looking at, unfortunately, I was looking for a bear indication. So it was telling me that maybe it was putting in either a deep retracement in time or price. Never mind, let's go and look at, oh, my drawing widget's crashed. Let's go and look at DIA, because that's the trade that we were talking about earlier. And we said that we were going to place it. So DIA. So we've got our strong trend. So let's look at a similar trade, but before the fact. So we've got our trade that we were looking at earlier. And let's just pop the 60-minute chart on. And there we have it. So we know that we're looking for, again, the daily chart is trending up. We've got the breakout, the pullback, and in time and price, time or price, or time and price. So price would be depth of retracements. We've not got it, which is great for a strong trend. It's a strong trend. So that's what I'm expecting. But so over time, we can see that price is just flipped over to red, and we can see that price is at the lower 20% of its 30-day or 30 bar range. So that's what this is telling me. So it's allowed me to wait for a time segment to say, okay, well, we're now at the lowest point, the lowest 20%. And what I can do now is look for that reversal V that we were looking for. That's what we said we were looking for earlier. So as it goes through there, we've got the gap lower. It looks like it's going to trade higher. And as it goes through that apex there, that's exactly what I'll be looking for as an entry. As that happens, the 60-minute chart will go from phase 2, because it's between the moving averages, and it will move into phase 3. So that's what we're looking for. That's the type of scan that we're going to do. My apologies, I thought we had one that we could have looked at, but ultimately that's what we're looking for. So that's how we can use scanning. We can find exactly what we want when we want it. And as a potential candidate, again, just looking down from the daily charts point of view, we've had those 3 candidates. So Amazon is in its top. You can see that there. Amazon is in a phase 3 trend, and it's brand new, potentially breaking out of its 30-day range. Let's go and take a look at the chart. So we've got 3 candidates. Now that we're looking at it, what's it doing? Very clearly phase 3, but right now it is in a consolidation. It looks like it's just breaking out. If you think about the indexes, the S&P, the Dow, that we looked at the beginning of our workshop when we reviewed the markets, it's that same type of pattern. The Dow that we just priced up is a similar type of setup that we could look for. The other one was Autodesk. Again, we can zoom straight into that. I don't need to look at any of the other charts. So what we're expecting to see, we've got the phase 3 trend. Check, that's what we've got. We're expecting to see price moving into the top 20% of its 30-day range. Check. And visually, this is the part that you can't code. Visually, we can see that we're in a consolidation. And looking at it, it's just breaking out. So you've got a pullback. I don't think today it's going to happen, but you've got this lovely little breakout. It's looking like, for the moment, again, we're only 30 minutes into the day, but it's looking like we've got this lovely little inside bar, little pullback that we can look for. And again, we're just going in back into the top 20% of its range. So this would be potentially a great candidate, not just for a statistical breakout, which is what this indicator's showing you. I used to refer to this as pattern number 4. But looking at it, we've actually got a price range breakout, and this looks like a great candidate. Didn't take us any effort to find it. Microsoft is going to be doing something similar, just because I happen to know it's doing something similar. So we've got a phase 3 trend, and we've got this consolidation. Visually, we've got it, but can you see that we're still inside the range here, even though statistically it's saying, you know what, we're in the top 20% of its rolling range. But visually we can see, you know what, it's still inside the range. Let's wait for the break. So that's where we're at. That's scanning. That's how I do it. It does mean that I'm not looking through hundreds of charts. I'm just looking at 1, 2, 3 charts today. It's one of those things. It takes longer to explain. It takes longer to explain than to actually do. The reality, it takes just a few moments to do. But that's where we're at. So scanning, thank you for your time. Thank you for your attention. And I'll see you all next week.